everyone, a very good morning. You've tuned into Market Fatafat on ET now with me, Mubina Kapasi. Markets absolutely flattened out. We have completely given up all those gains that we saw, and now the Nifty and the Sensex are absolutely flat with just a bit of green seen on the screen. Now, Market Fatafat is, of course, all about flagging off those individual movers and shakers. But before we do that, we have corporate earnings to address. So first up, Suprajit Industries, which saw its second quarter profits soar. The revenues and margins were a bit tepid. So let's understand what went by in the quarter for Suprajit. We have Mr. K. Ajit Kumar Rai with us. Mr. Rai, good morning. Thank you for joining in. To start off with, it's interesting that despite the weakness in the sector, you have been able to post a decent margin expansion. So tell us what exactly aided you in that.
Good morning, and thank you for having me on your channel. Yeah, I think the first half as well as, in particular, our second quarter has been a pretty good quarter compared to what's happening in the industry. As you know, automotive industry during the first half of the year has degrown by nearly 15%, and the last quarter has been even more dismal. Under those circumstances, I think we have come out with a good set of numbers. We have been able to maintain our sales at the similar level of last year, despite the negative movements in the market. And margins have generally been stable. Of course, the profit after tax has been helped because of this change in the taxation, which has been recently announced by our finance minister. Having said that, I think our margins have been very stable, unlike some of the industries that have been suffering in this automotive space.
Okay. Did you see any impact of the OE production cuts on your top line? I mean, I know for a fact that your top line is more or less flat. So on the volume front, etc., was it because of the fact that, we have seen cuts in production?
Yeah, I think, despite those cuts with the OEMs, we have been able to maintain a flat. That means that in some other spaces that we have been able to do decently well. Our aftermarket business has been quite robust. Our exports of cables have been fairly robust. Those are the kind of things that we have been able to strengthen our position, which has been able to offset some of these downtrends in the OEM market. So we have been able to do both in the domestic as well as our export market much better in the aftermarket segment.
What was the aftermarket sales? How much does it contribute for Suprajit? And also, you mentioned global sales as well. So, are you okay with the kind of demand situation you're seeing over there?
I think, about 22% of our business is in the aftermarket. So that has had a very good quarter and as well as the half year. And our automotive exports has been pretty robust. That has also helped us in managing our top line as well as the margins. So, those are the two, areas where we have been able to do better. And in terms of how the, business scene is overseas, I think both Europe as well, US is also undergoing some amount of business slowdown, I would say, in the automotive space particularly. But our position is that we are able to get new businesses. It is not that our volumes are growing because of our existing customers, existing projects, but we are winning new projects, new contracts from our competition. I think that is what is adding to our business in the international market.
Sir, you're expecting single-digit growth from auto industry in FY20. Your margin guidance as well, you've put it at 14 to 16%. So if you could just help us with the guidance for FY20.
Yeah, I think our guidance has been that we will do 5 to 10% better than the industry, and that we will be able to manage a margin or EBITDA margin guidance of 14 to 16%. If you look at the half year, when we have grown at a minus 15 and we are at a plus 2, we are actually outperformed the industry by 17%. Similarly, our margin has been comfortably above 14%. And I think, although, there is tremendous pressure at the domestic or OEM business, we still think that we'll be able to meet our guidance as, elaborated earlier.
Okay, got it. All right, Mr. Rai, thank you so much for joining in and congrats on the good set of numbers. Quite steady for Suprajit. And now let's move on and talk about another company that's delivered its Q2 numbers. That's Cochin Shipyard, a neat 40% jump on the profit after tax. lower tax expenses. So we'll talk about the ship repair book contracts, the capex plan going ahead. Madhu Esnar, the CMG of Cochin Shipyard, joins us now. Thank you so much for joining in. Good morning. Decent growth, sir, in the consolidated top line. Shipbuilding revenue has grown a robust 70%. But on the other hand, the ship repair segment saw a contraction of 45%. So that's quite stark. But we understand that that was partly due to a one-off in the previous year. So how would we summarize the quarter gone by then?
You put it clearly, like the shipbuilding is seen good traction. And there is also because we have now been able to sign the phase 3 contract of the indigenous aircraft carrier, which we are building. So that was in the works for some time. It took a bit longer than expected, but then there is a significant contract which we have signed. So the turnovers are being recognized and revenues have started flowing in from the phase 3 contract on the shipbuilding side. And that's why you see this sharp jump in the revenues that's happened. And on the ship repair side, we are not unduly worried because, as you rightly put it, last year around this time we had the aircraft carrier of the Indian Navy in the shipyard for repairs. And we expected that this year, since we don't have that, we are comfortably placed on the ship repair side also.
Okay. And now, of course, if we have to talk about a key parameter, that's the profit after tax. There's a 40% surge because of the tax, the lower tax expense. So that's in turn because of the corporate tax cut. So what's the effective tax rate going to be for FY20 versus FY19?
I think we should be on a half-yearly basis. We have now seen about 27%. So we should be about for the full year. We should be somewhere around 25%. Will be coming in.
Okay, all right. What sort of a pace in deliveries will we be seeing in the coming quarters based on the project execution pace?
We have a lot of vessels being delivered from now onwards. We have larger vessels and we have smaller vessels being built in the yard. But as we see from coming January onwards, we'll have a lot of vessels getting delivered from the yard. And on the indigenous aircraft carrier also, we are getting into a very critical path of the project. And there is significant milestones. It is not, delivery is 2021 February. But then there are significant milestones to be achieved on this project. So there is significant traction both on the shipbuilding and ship repair side.
Okay. What were the contracts won in Q2? And if you could share with us the order book, how much is shipbuilding out of that? And also any upcoming chunky or tenders or orders you're expecting in the second half?
See, you're probably aware that shipbuilding, it's not we can't really count on a quarter-to-quarter basis because some of these contracts would be pretty large and some will be a smaller level. But a significant contract which we have picked up this quarter is Cochin Water Metro projects. 175 crore contract for 23 boats, but the significant part is these high technology vessels. These are hybrid battery operated vessels. I should say 23 vessels of this type, one go, is actually first time in the world. And the kind of chemistry we are putting into the batteries, these are very important. So for us, it's very exciting to have this contract with us. But otherwise, we have consistently picked up contracts over the last year. The most significant contract was the 8-vessel ASW Corvette contract, which we picked up from the Indian Navy, which is a sizable order, 5,400 crores. So all in all, the order book as of now, from whatever we have signed, and the part of what we call the cost plus part on the aircraft carrier, we are around at 16,000 crore is the order book position as of today. And we feel that's decent and healthy. In fact, I would say that we wouldn't probably want a longer or a larger order book because in shipbuilding, as we move forward, you're comfortable with a 3 to 4 year order book position. That's the norm which we would like to follow.
Based on your H1 performance, what sort of revenue growth outlook and EBITDA margin range you're working for this fiscal?
We will be 19-20% EBITDA levels.
Okay, that's for your margin, is that right?
Correct.
Okay, and what about a revenue growth outlook?
We have always been guiding 12 to 14%. So I would still stick with that kind of guidance, and we're fairly confident that those kind of revenue growth will come in, 12 to 14%.
Okay, thank you so much, Mr. Nair, for joining in and helping us understand what went by in the second quarter for Cochin, and hope we can speak next quarter as well. Okay, well, and here's the final corporate that we are going to talk to on Market Fatafat today, and that's Union Bank of India. The MD, Raj Kiran Rai, spoke to ET Now on numbers, the roadmap for the banking merger. Remember, Union Bank is one of the anchor banks in the third merged entity. He assured employees that the transfer policies would not be a cause of too much disruption.
The focus is going to continue. Again, it is a customer-centric business models. So we are going to take care of the customer as we took care of them in the last 100 years. So it is more of digital now. Plus, there is a big responsibility on us, being anchor bank that Andhra Bank and Corporation Bank is amalgamating with our bank. So the size of the bank is going to double. So we need to get into technology much quicker, faster. Today, I think Honorable Minister of State for Finance also spoke on that actually, because the disruptions are so quick. I think we need to adapt to these changes very quickly and build a totally different digital bank for the next 100 years.
What is the kind of challenges do you see in amalgamation, which will be the biggest ones?
Actually, we don't see much challenges as of now, because already we had some experience having Bank of Baroda having done it already. So I think the procedural issues are taken care of. So we actually had to take the human resources together, and also we need to take the customers together. So I think already collectively all the three MDs, we are addressing town hall meetings where we are addressing the customers, we are addressing the staff. So we are trying to give confidence to people that there is not going to be any disruption, there is not going to be any problem, everybody will be taken care. I think this message is going very, very sincerely to people. We don't foresee any problem. On the technology side, integration already the process is on. So we don't foresee much problem because we are on the same common platform.
Speaking about the current state of economy, sir, obviously the finance minister also spoke and urged the PSBs to go ahead and diverse loans. How's been the status there? How's the liquidity cycle at this point of time when you speak about the rural market especially?
See, liquidity, there is no issue at all, and even availability of funds with the banks. If you look at the additional government securities we hold, there is a huge liquidity available. That is actually on the corporate credit side. Actually, there is a deleveraging which was happening for some time. The corporates are using less of working capital. There is no fresh term loans being taken and all that. I think we are coming to the end of that cycle. I think hopefully the way the things are changing around, maybe first quarter of next year, that is Q4 of this year, we could see some changes happening. On the agricultural side, actually, the growth is there. So maybe the first crop which is coming now, the kharif, and like some places there were some disturbances because of floods and all that, but overall crop scenario seems to be very good. So but then like our water reservoirs are full, so I think the rabi crop must be much better. I think.
Okay, well, that was the Union Bank of India management talking on numbers and the merger. Let's take a look at the RWI small case and significant underperformance compared to what we're seeing on the benchmarks, which are absolutely flat with a negative bias. The RWI small case is at 565, down 0.6%. Quick break on the show, but do come right back as we'll kickstart the countdown ASAP. Welcome back. You're watching Market Fatafat on ET. Now let's kickstart our countdown of movers and shakers and quickly introduce from our research team Prana and Samya, and we are joined by Devang Shah of Angel Broking on the technicals. Hi everyone, good morning, and I'll kickstart Fatafat with Sun TV, which has posted quite a disappointing set of numbers. Consolidated PAT has come in at 368 crore rupees. Consolidated revenues have come in at 825 crore rupees. There has been a dip in ad revenues, and yes, you do have certain brokerages still maintaining their buy stance on this one, but yeah, it's certainly plummeted after the flattish revenue growth, as well as the fact that the expenses as well rose a whopping 65%. So that too in turn did play havoc on the margins and the bottom line. Okay, moving on very quickly. Devang, ICICI Bank, no stopping this one, on its way towards the 500 rupee mark perhaps?
ICICI Bank is moving in a strong uptrend. It's trading above all short-term and long-term moving average. Also, it's maintaining its higher top, higher bottom chart structure. One can buy this stock at current level. Stop loss would be around 480 and target would be 510.
Okay, buy on ICICI, target 510 rupees. Samya Narayan Rudale, how are the second quarter numbers and what are brokerages saying?
Mubina, after posting really good set of numbers and rallying quite strongly on back of these numbers, today we have Morgan Stanley, which has actually maintained an overweight stance with a target price of 349 rupees per share. And today also we're seeing the stock rallying close to about 4%. It's although off from the day's high, but it's still rallying close to about 4%. Now, Morgan Stanley believes that the company has improved underlying earnings power for the last 3 to 4 years and has expanded bed capacity through geographic diversification, which is going to bode really well as far as Narayan Hudale is concerned. Losses are narrowing in these new centers and they expect mature facilities given stable growth visibility, and this is definitely all positive when it comes to Narayan Hudale.
Okay, moving on very quickly, Pranay, another result reaction in the form of Coal India.
Well, yes, Mubina, and net the numbers were above street expectations, partly aided by tax benefit coming in from gain over there, and therefore you have brokerages which have increased their EPS estimates by about 3 to 4% for the next 1 year. Citi has a buy with an increased target price of 270. They see that the risk reward is favorable with a 1 year forward PE of just 7 times. JP Morgan also says that the attractive dividend yield of 9% is something that should make investors overweight on the stock.
Okay, that's Coal India. It's actually flattened out now. No significant move seen over here. Okay, stock number 5 then is Tata Motors. Look at the way that stock is buzzing today in trade. Yesterday, reports suggested that Tata Motors is scouting for a partner for JLR, and they have approached BMW as well as Chinese automaker Geely. Remember that not exactly talking about selling JLR, but looking for finding partners to save on costs, share the burden of investing in electric vehicles, among other things. Now, of course, Geely has said that there have been no talks yet, with Tata or JLR. So this is sort of, let's see how it pans out. Additionally, Tata Motors also reported a 19% dip in global wholesale numbers for the month of October. That includes JLR. Moody's has given a Ba3 rating to the proposed senior unsecured notes to be issued by the company with a negative outlook. Okay, Devang Piramal, 1800 rupees for this stock. What's the way forward here?
Talking about Piramal, Piramal is a bearish on a daily and weekly chart. It's forming a lower top, lower bottom formation in both the chart structure. It's just pullback rally. It's in recent correction. The rally may continue around level of 1870, 1890 levels, and one can look at booking profit at this level and maintain strict stop loss 1735.
Okay, that's the view then on Piramal Enterprises. And Soumya, Britannia, how are the Q2 numbers?
Good set of numbers, particularly on the profit front and the margins. They were both above our expectation and in fact above the street expectations. Revenue were pretty much in line. Now talking about these results, we even had Citi with coming out with a brokerage note. They are maintaining their buy stance with a revised target price of 3,575 rupees per share. In fact, even they say that the numbers were ahead of their estimates, and they've revised the EPS estimates by 9 to 10% over FY 20 to 22. So clearly good set of numbers reported by Britannia, and this is clearly reflected in the stock prices, which is gaining close to about 4% today.
Management commentary as well was a bit more positive compared to the last time. Moving on, Pranay, Mahanagar Gas, there was a slowdown in the volume growth, but how are the other parameters? Because there's been a sharp spike as well, by the way, in the stock as we speak.
Well, it had opened up nicely on strong operational performance. Yes, the disappointment was in volume growth. That came at 1% because of the sluggishness across segments. Partly it was impacted by the gas disruption from ONGC, and also if you look at a couple of other parameters, then PNG growth was good, but CNG was not so much. What the management has said that the mix will remain positive for them at the EBITDA per unit level, and therefore strong operational performance can be continued going ahead as well.
As we speak, it's just ticking higher for the stock price of Mahanagar Gas, may just hit 1,000 today in trade. Natco Pharma, Q2 numbers for this one as well were pretty decent. You do have it was not that great. Revenues came in at 485 odd crore rupees versus 543 crore rupees. Profit after tax is well disappointed. Margins too not exactly good. In fact, the Q2 profit declined by 35 odd percent. The decline in revenue and profits is primarily due to the anticipated drop in the Oseltamivir product sales in US as well as the Hep C sales in India. So that's the reason why there was a drop in revenue, margins, PAT, stock price is well down 3.5%. And Devang, there seems to be stopping the stock price of DLF as well, because now it's been able to go beyond 200 rupees. It's one of the outliers of sorts for the realty stocks today in trade. What's your view?
Talking about DLF, after a long phase of consolidation, we seen a breakout resistance level also in a weekly time frame. It's broken out descending triangle pattern. So one can hold this stock with a stop loss of 196 and target would be 225.
DLF target 225 rupees. Samya, Venki's India, we are seeing the stock fall significantly. So how was Q2 for them?
Well, talking about the Q2 performance, on the top line front, we saw a growth of over 26% on a YOY basis. On the profit front, well, it was up by 148%, but this was primarily aided by the profit and actually the tax impact. So adjusting for it, the performance on the bottom line was not very impressive, and I think this is the reason why the stock's falling today. There's a sharp fall of over 6% in the stock today.
Okay, but with that, we are out of time. So Pranay, Devang and Soumya, thank you for joining in on Market Fatafat. Now, every evening, remember, we get you our Rise with India prime time comprising two shows, The Money Show and Startup Central. Here's what we have for you on The Money Show today. As India grapples with an economic slowdown, we are reading more instances of companies having to lay off employees. So for all those employees, what sort of care should you take to ensure that your job may pause, but your money should not? That's what we will be discussing on The Money Show. So do send in any questions or queries you may be having. If you feel you may lose your job, if you are in a secure job, or if you have lost your job. Also, new ways of traveling call for new age insurance policies. Bajaj Allianz has been at the forefront of such policies. We will be talking about all of these new age insurance policies with him. So stay tuned for an action-packed day on The Money Show.